If you're ready for a new level of trading, you are ready for the hidden secret that guarantees master level returns. This single structural principle is your key to complete confidence, and I'm going to show you this simple setup now. We're on the pound New Zealand on a daily time frame. We're going to walk through that three-step market structure logic right now. And I'll show you how easy this is. First, let's zoom out on this chart, and we're going to find an area back in price, and we'll just go to a replay mode. So let's mark off this area. Let's say here's a nice low in the market. We'll zoom in. But before we start marking this up, you need to understand the actual logic of how we're going to look at candles and how we're going to mark out our current highs and lows. Now, there's a way we do this on a bullish market and a bearish market. But let me just show you quickly a bullish market, and you'll see when we go through the actual candle step by step. So let's mark this off, and let's change this to a bullish candle. We then want another bullish candle, let's say, followed by a bearish candle. So when we see this candle closing below this previous candle's low, we'll make that a red candle. So we see a bullish market followed by a bearish candle. We close below this low, and that is what we're looking for. We're looking for this close down. It must close through the low, even if we have a wick like this, closing below with a body candle close. What this forms for us is a valid high in the market. It's that simple, this structure. But as we walk through this replay mode on a daily time frame, I will go through more step by step so you can see exactly how this is done. And if you keep watching to the end of the video, coming up later will be how you can actually automate this full process with the companion tool. So let me just go through, and we'll delete this off the chart. Let's go closer into these candles, and we'll walk through how you map up this structure. So the first thing we need to look for is a valid low in the market. This is a current valid low as soon as we identify a close up. Now, what I mean by close up, we must see a candle closing above the previous candle's high. So from this low, this is the first time we see that close up. Now we're going to mark off still the valid low in the market. Now let me just add my magnetic tool on to make sure it's in the right place. We've just now, in fact, closed through that low. So I mark this off as a solid level, and we'll mark this off as a low in the market. So we'll put this to the far right. So we have a valid low, and we're now broken through that low. That's what we're looking for. We've closed through. Let me go in closer. You can see where we just closed through. So when we see a valid closed through, we're looking for the same sequence when we're in a bearish market. We're looking for that close up like we see sitting right here in the market. So we look from this candle that closes through that low, we look back for the last time we see it close up. Now that is in fact right here on this candle. So I just remove this off now because we don't need this on there. Now we can't mark it off from this high like this. Why? Because we have this candle pushes up before we see the push down. Now we never closed above, but this is a valid close. This would have been a valid high if we didn't see this wick to the upside. Because we see this wick, this becomes a valid high. And what we can now mark off is this as our current high. Now, this now becomes a breakout structure. So we'll actually just duplicate this for now. So I can use this in a moment, but we'll change this now to a valid VOS. And we'll also place this into the center. So what we've now got is our valid high in the market, our valid breakout structure. That is our current downtrend in the market. Now we don't have a valid low until we see a close up again like this from a low. That creates the valid low in the market and shows you a valid trading range. So let me just move this across. Let's just go forward on a candle by candle. Now instantly we've just seen a candle closing up. This candle closed up above this candle's high, and that validates this is a low in the market. So now we have our current trading range, and look what's happened straight away. The market's pushed up and wicked straight through that high. Now until we see it close through this high, we don't have a valid breakout structure. And what can happen here is this can be a liquidity sweep, and then we can see a run to downside again. Let's just see what happens in the next candle. And we push higher, and it's a valid breakout structure. Now, what happens here is that we have a different format that we use to find our valid low and our valid highs now. Before we were using the bullish candle closing up. Now we use the bearish candle. So what we look for when we see this is our breakout to the upside, we look back for the last time we see it close down. So we close down on this candle below this candle's low. We then see this candle do the same, close below. So this becomes your valid low. So our low stays in the same position. Now, if I just take this level away, we'll take this as our breaker structure, whereas our previous high was there, and this is our new breaker structure. So now we have the start of a potential bullish trend in the market. Now, what this is also showing you is a potential change of character. So you could actually change this to a dashed line to show you it's the first change in trend since this bearish trend. So we've been in a strong bearish trend. Now this potentially shows me a potential change in the trend. So how do we find now our valid high? Well, we look for the same sequence like we did the low. We must see it close down like this now for a valid high. So let's go forward a candle by candle. So we continue bullish. We get our first bearish candle. Again, this is very close. Let's have a look. We have to go in closer. We didn't quite close it. We closed at the low, so it's not a valid high to mark. So continue the next candle. So we start to be a bullish inside candle, and we'll keep going forward until we see a close down. So this is not going to be a valid high to mark for a new breaker structure. It's just basically a continuation of this move. Now, this candle, zoom into the candles, does close below this candle's low. So this now creates, if I come back to where our high was, this creates a valid high in the market. So now we have our valid trading range from this low to this high. And what you look for is price to come back into an area of interest, whether that be supply and demand, imbalances, liquidity. Now we have a few things. We have some lows here of liquidity, we have an imbalance here, and we have an area of demand. You look for price to come back into those areas for potential move higher. Now, price can also do another thing from here. We could quickly sweep this high and then completely shift structure. We already have our first breaker structure here, our change of character. So really, we want to see another breaker structure to show a continuation of a bullish trend. Let's continue through candles. So we get a nice sweep of all these lows pushing down, and then we just mark out this is our area of bullish imbalance. We haven't quite pushed into that area of imbalance. Let me actually just change this so it looks a bit better. So let's bring it down. Okay, so we have a bullish imbalance that price hasn't quite come into. But we have swept all these lows for liquidity, and that could continue price to break higher. Let's see where we go. So we wick the high. So the market has taken liquidity. We've wicked this high. Now this could create a reversal and reverse structure again to downside before we see the market continue lower. But if we push up one more candle, we close through, that's the new breaker structure. We've taken liquidity at this area. So next candle, we continue bullish. We actually wick through again and we sweep this high for liquidity, and price is holding. This could reverse price. Let's see what happens. And it does. We start to push lower. That's reading your current trading range. Now, if we continue to push down, likely price will run for this area of imbalance. Let's just see if we do. Now we're holding. And we do eventually break higher. So now we've got a valid breaker structure. So what we've got now is a new breaker structure. Let me just grab this. Where was that high? That was our high here. And this is our breaker structure here. Now we'll make that a solid line because it's a valid breaker structure. When we see this candle closing through, we're going to look for that last close down for a valid low in the market. So there's our last close down. Let's mark that off. There's our last close down. But before we broke up, we made this low. So we can move this low now to this current low in the market. This becomes your valid low in this bullish trend. Now, this was a valid area of imbalance. Price never came into it, but we did sweep these lows here for liquidity. Now, the same thing, we're looking for that close down once again. So we now get the close down on that candle. This is a valid high. This is our new trading range. This is how simple this structure is. You apply the logic of your low, your high, your breaker structure gives your trading range. This is how you're going to make it 100% perfect for yourself when you're starting to look for those trades. Now we have an area of imbalance here. If we push through that imbalance, we'd like to shift structure or take that low. Let's go forward with a candle. We currently hold at the imbalance. Let's see if we're going to push higher from here or continue to push through. Now we've pushed through that imbalance. We're likely to want to run for this low. Let's see if we can run for that low. We're holding sideways. Let's see, and we do. We run for that low and we break structure. It's reading the structure here. So now we've got a new break of structure. So now we're going to just copy and paste this. Now what this becomes again is a new change of character as such. So we can make that a dashed line, just like we saw down here. So now we have a potential change in trend again to downside. We're looking now for that close up, which is going to be this candle to validate as a current high in the market. So we have our new current high. So now what we're looking for is our next close up to validate for our low. You can see the market continues down and eventually this candle closes up. That gives me a valid low in the market. So now we have our current trading range from this high to this low, our last break of structure. That's the 3 levels we need. That's the logic of using this structure. Now simply what we're looking for is price to pull back above this high into this area of imbalance, into the area of supply for a new run lower. Now if we shift through that area, we'd like to shift structure once again. Now I'm going to start fast forwarding this a bit now so you can actually see how quickly this can be done when you start marking this up. Just go forward and see what happens. So we do push above currently towards this high. Okay, we'll follow price sideways and we're running up and looks like we're about to take this high. And we just swept through that current high. We need to see a valid break of structure. So what happened was we took this high here first, pushed lower, came back to break through, and then price broke through this level here to run for this valid high. Now we need to see whether this high is going to hold price to push back for the low, or we're going to see a new shift to the upside. And we get a straight shift to the upside. So what we can now do, we can take this, move this across, bring that over, and we need a new break of structure. Grab that, come on. Thank you. So we need a new break of structure here. Where is it from? From this high. And we have a break. Again, it's a new change of character. It's an instant change of character. So price is in a sideways range. If we were to zoom out right now, you'd see that price is sideways because we're seeing that dashed break of structure. But as soon as we get the break structure on this move to the upside, what are we looking for? We look for that close down. That creates my current low in the market, which is this low here. And we get the next move up. We're looking for the next close down. We still haven't got that. This isn't a close down, so we continue forward with our price. And we continue up, and then we get the close down that candle. This gives us our new trading range. So now we have our bullish range in the market. Let's continue forward with price and instantly a new break of structure. That's how quickly price will move. So now let's mark this off. Let's grab this. Okay, so we'll bring this across. And this is our new break of structure. And now we have a valid bullish trend in play. And now what we can do, we can change this to a solid line to indicate that. We're looking for that close down. We don't get it. That is not a valid break of structure. We're still bullish on that move. We're looking for our close down. There's our valid close down. This becomes our valid high. So now we have this as our true range. But what we missed here is this last breakout. This becomes our new low. We didn't move that up, so my bad. This is where we see a close down, and we just mark it off. When we saw that break of structure, that was our close down for a valid high, and it's also our close down for a valid low. So let's continue with price to start seeing how this is going to move. So now what we've actually done, we've wicked through this high before we've really seen a valid pullback. This could make price shift structure again or run towards that low. But we don't have to. We can continue up. Let's just see what happens. We do run towards this low. And let's mark this across. We're holding currently this era of bullish imbalance. Now, if we shift through, we could continue back up for the high, but we could still run this low here. Let's just see what happens. And we do run this low. And all that information is coming from this one high in the market. That's the logic of using this structure. Once you understand it with your three levels, your low, your high, your breaker structure, the logic of mapping up is very simple for you to do, 100% perfect every time, across all time frames, across all currencies. Very, very simple for you. You can see how we can use those levels to indicate the direction of the market. I'd said to you at this point when we saw this, we could potentially now run for this low. We dropped into this imbalance, we had a small pullback, and then we broke out. Now, when we see that breakout, we're looking for our new high. This becomes our new high, and this becomes our new breaker structure. So we mark this off as our new breaker structure. But this is going to be a dashed line again because price is now bearish again. And to look for our current low, we look for that close up. So we continue until we see our close up. So close up, yeah. Okay, we continue forward. Now we get our close up right there. That becomes this low. So that is the way you can map this structure very, very quickly, understanding this logic. So quickly we'll go forward with pricing, see what happens again. So we pull back into this era of imbalance. We've actually just made a nice sweep in the market here, sweeping above all these highs. This could continue down for this low. And I'll just mark out this level here. We held at this area. That could continue price to run for this low. That's what we'll be looking for. And we do run towards that low. And this is just reading the candles. Now we go back up again to sweep it. So potentially we're still holding that area. If we close through that level, then we could go higher. At the moment we haven't. We're still looking for this low to be taken. Now things have changed. Now we've closed through that level. That means price could potentially run for this high. And let's see what we do. And we do. We run for that high. That's how you can quickly start to learn the structure and use this in your trading. If you want to see the companion tool that automates this entire system in seconds, watch this next video on market structure that shows the process inside the tool.